Hello everyone, Greg Diamond here, editor of 10 Stock Trader with Stansberry Research. And this week's video, I am going to look at interest rates as it relates to the stock market. We have a big week this week with PPI, CPI, and this is going to determine largely what happens with the Federal Reserve. But I'm looking at it more from a technical perspective as a roadmap for inflation, interest rates, and then in turn what the stock market is going to do. So let's jump into it. And this is a chart of the 10-year U.S. interest rate, okay? And I want to go back to, basically I have three scenarios that I'm watching over the next couple of weeks, okay? So I want to go back to last year. Interest rates topped out here, as you can see, and then we just had this huge move down, and this resulted in a large rally in the stock market. Makes sense. Interest rates go down, stocks go up. Simple as that, okay? Now, from the start of this year, interest rates have broadly rallied, okay? And we can see here, obviously, into late April, we had this low or a high in interest rates rather, and then stocks kind of panicked, and now we've kind of moved back up. So the question now here is, as you can see, we've traded back down to support, all right? So I have three scenarios here unfolding. Number one is this green line that just breaks this support, and we have a similar move, probably won't be exactly the same, but a similar move down in interest rates that results in a higher move in stocks. Simple as that, okay? Now where it gets a little bit tricky is we'll have a little bit more volatility. The blue line is, a bounce over the next week or two, fails to make a new high, and then we drop again. And maybe this doesn't drop, but it drops into here, and then we get a rally, and then eventually it does drop. All right, and then the same thing with this red line is higher readings, higher inflation, or higher jobs number, whatever it might be. Fed speak, who knows? Okay, I'm not going to sit here and tell you exactly what the inflation numbers are going to be. It's not what I do. Okay, I look at this based on the probabilities. We don't deal in certainty, but price tends to show us ahead what's going to happen. So I'm looking at these scenarios as the probabilities of what could happen. So these are the three probabilities that I see. Based on other technical factors, and I'll relate that to the S&P 500 as well in a second. All right. So the red line is a little bit different. This is where we get a little bit more volatility. We trade right back up into resistance, and then we kind of have another breakdown. All right. Now this is the 10-year. I also want to show you the 2-year index. So this is a shorter interest rate chart. Okay. But what I really like about this chart is sort of the technical factors that go into it. So from the top here, I've labeled what appears to be a near perfect, or textbook rather, 1, 2, 3, 4, 5 down in interest rates. And now what we have is looking like a correction off of this low in an ABC. All right. And you can see these blue boxes are a symmetrical move. Basically what that means is that this move equals this move. So the A wave is very close to or near equal to the C wave, and then we had this big breakdown. All right. So again, similar to the 10-year, am I looking at where this just simply trades lower because as you can see here, we actually broke below support, or does it try to, get another rally here? But this would be something where, it's a false breakout, and then we have a huge move down. So if we have this breakdown in interest rates, that's going to be very good for the stock market. Okay. So let's look at that relative to the S&P 500. All right. And again, these are just three scenarios that I have. So if you think about what I outlined in the 10-year interest rate, we're going to put that into the S&P 500. Okay. And again, so this is a green, a green situation where interest rates bottom here in October, and obviously stocks rallied. You can see how we had this RSI that was oversold. All right. Is this a similar situation from last year? It doesn't necessarily mean it's going to be the exact same, but we had this oversold level into the low on April 19th. Okay. That was kind of a panic selling. And since then we've rallied. All right. So I can't rule out the fact that, we have this similar situation in green where stocks just continue to grind higher. If those interest rates start to decline again, that's really quite simple. All right. All right. Now let's look at other potential scenarios. Again, this is the blue where it kind of gets a little choppy. Maybe interest rates bounce a little bit. We see some volatility in the stock market. All right. But it doesn't make a new low, and we just kind of get another grinding rally. What's also interesting is this red line, all right? And this would be extreme volatility, okay? It would probably freak a lot of people out, but I still view it as bullish. And here's why. Okay, so let's say we get a new high, okay? And this rallies up here, and then, interest rates or whatever it might be, maybe NVIDIA earnings, okay, next week, and this kind of spooks the market. Well, essentially what that is going to do, from my perspective, is going to let's say this happens, all right, and we're looking at a situation where, yeah, you're actually falling into long-term support within the stock market. And I would not be surprised if we saw, so let's say that that red line does play out and we have this move back down below 5,000, maybe into the 4,800 level. This is a very big Fibonacci confluence zone of support. So essentially what this would be is something where we would have an ABC and then rally again. So that would be something that I would look for actually to get very aggressive with call options, okay? And I've been looking at various stocks and ETFs to trade for 10 stock trader subscribers. We've had multiple game plans coming up, and I think this is, or over the last week, I'm going to have even more over the next week or two, because I really believe this is going to be an important inflection point. Call it a May surprise, if you will. But I'm looking at this from a bullish perspective, but also taking into account how interest rates are going to reflect into the stock market. So that's what I'm looking for this week, one of those three scenarios, and I will see you next week. Thank you very much.